Boom! Hey everybody, thanks so much for tuning in to Young Money Investments. My name is Cameron Benyon, and today we are going to get into a new little video. I think because I've gotten so many messages on Instagram from a lot of you new traders that are asking me kind of where to start, I thought this would be a great video to kind of go over some of the things just off the top of my head. I wish I wrote more things down. I probably should have before I started this video, but I wanted to explain to these new traders, and this is kind of the title of the video is, if I were new to investing, how would I start? How would I start trading? That's what this video is all about. So let's roll the intro and let's get into what I would do. All right, so today we are going to talk about what I would do if I was a new investor. How would I start? How would I go about it? And these are some of the things that I would think of if I was just starting to get in the stock market. Currently, at this time, as of October 25th, 2018, we are in a pullback. We've had quite a bit of pullback over the past 2 weeks. The market is very, very, very volatile. We'll see swings up of 600 points. We'll see drops of 600 points as well in a day. My portfolio is swinging massively right now, and it's something that you have to get a grip on. And so the first thing that I would kind of realize as a new trader is, number one, the best investor in the world is not the smartest person. So if you are not the smartest person, I don't want you to worry about not being able to be really good at this. So what it really takes is someone being disciplined. The disciplined trader is going to be the one that will be profitable. So, you obviously need a certain level of skill and a certain level of understanding of the markets and what these terms are and how those things work. But really the biggest thing is you need to be disciplined in your actions. You need to make a plan. You need to have a position and a set price based on your chart pattern, if that's how you're trading. If you're doing long-term, hey, you need to have an understanding of where the company's going, understand the financials. But I'm talking more about swing trading because that's what most of you are tuning in for, is trading using chart patterns, as well as a little bit of the fundamentals of a company, but mostly using chart patterns. And so understanding where the company, if it breaks support, understand that you need to be able to stop out and sell your position and take a small loss. As well as you need to not be greedy. You need to be able to know, okay, this is the price point that I'm going to sell out at. So it's not about being the smartest. You do need to understand the chart patterns, but you need to be diligent and disciplined in your homework and your research that you've done. And if you can do that, you will be a successful trader. If I was new to investing and I was starting to trade currently right now, especially with it being a pullback right now, you're going to see a lot of blue chip companies. A blue chip company is a multi-billion-dollar corporation that's just big, that they're a very good company. Companies like Amazon, Apple, Google, Facebook. I'm trying to think of what else. Tesla is just on the top of my head. I invest, and if I were a new investor, I would invest in companies, and maybe Tesla's not a great one to talk about because it is a little bit more volatile, but I would invest in large companies that have had a massive sell-off. When I first started investing, that's how I got involved in trading, was going conservative, but buying these large companies like it was having a sale. So you want to buy companies, especially right now when earnings are coming out. Companies are reporting great earnings. Amazon was up like 7 or 9% on the day. It was up like $180 some a share. And literally it just tanked after earnings, yet it beat earnings by 86%, I believe. And so these are times where if you understand the fundamentals of a company are doing really well, you can buy a company that is severely undervalued for what it will continually do in the long term. So that is one of my biggest recommendations, is you as a new trader, don't get into penny stocks, don't get into options trading, don't get into these things that will most likely hurt you in the long run, research it, paper trade and, do those kinds of things, shorting a company, but focus on the value companies that have sold off recently that will have good outlooks later on. And this to me is like the best time to be buying up stocks. So that's what I would do if I was a new investor. The other thing that I would do if I was a new investor, and this is going to seem silly, is, and I should have probably talked about this first, is I would open up a Robinhood account. If you haven't opened a Robinhood account, that is a free trading platform that you can use on your phone as well as now on your PC. Robinhood is a very basic platform. The reason why is because it is free. It doesn't cost you to buy or sell a company. Most of the time when you buy or sell a company, it costs you anywhere between $5 to $8. So you buy, whether it be 1 share or 100 shares, it costs you $5 to $8. To sell those shares again, it's going to cost you another $5 to $8. Those can get expensive if you're starting out and you only have $500 to trade. If you only have $1,000 to trade, I wouldn't recommend someone getting into an account where they have to pay a commission unless you have somewhere around 10 to 15,000. And even at that, this strategy that I have in terms of using Robinhood as your buying and selling platform and using TD Ameritrade's Thinkorswim platform for all your charting is kind of the best of both worlds. You not only get a free platform where it has all the charts and everything like that. In fact, we can even swing into this real quick. I can share with my screen and show you. This is going to be TD Ameritrade's Thinkorswim platform. As you can see, it's probably a foreign language to some of you that are brand new, but this is the chart. These little bars, as you zoom in fact, I can do a quick little zoom, are what we call candlesticks. Red means that it was dropping during this time frame. This top little part, as well as this little part right here, is called a wick, which means that was the swing of the price. But this is where it kind of started out and this is where it dropped, and that's called the body of the candle. So I have a lot of other lines. I draw what's called support lines. You have your EMA or exponential moving average. You have your SMA, which is your simple moving average. And then you have your volume, you have your RSI indicator, which I use a ton in charting. But this is something that I don't want to get into in this video. I have other videos that explain all this stuff. But I would, in terms of being a new investor, I would get into this. I would have a Robinhood account. I would fund it. If you need a code to get a free stock, we both get a free stock if you use a referral code, which is awesome for everybody. Message me on Instagram. Young Money Investments is where you can find me on Instagram. I'd be more than happy to send you a referral code as well as answer any other questions that you might have about this. Again, I don't get paid for any of this, except I guess I do get free stock, so it does help me out. But that is what I would do. I would get started with that Robinhood app and I would get into TD Ameritrade's Thinkorswim. Doesn't cost you anything to get started with that either. The one other thing that I will say in terms of, if this video is a little janky, it's because I lost my train of thought and I have no idea where I was going with that. But overall, those are the things that I wanted to kind of talk to y'all about is, with down markets, this being a really good time to buy. And I know it's difficult. I know if you're getting new and starting out in the market, you're probably reading a lot of these negative reports that, oh, we're headed towards the next great recession. It's a down market, et cetera, et cetera. It's not. There are certain fundamentals. Yes, maybe the economy could be slowing because of interest rate hikes, but you need to learn. And if you do have questions about that, feel free to message me. I know I keep saying that, but I'm here to help. That's really my ultimate goal with this. The following video that I plan on putting out after this is going to be my rules for buying during a pullback. These are some of the rules that I've personally developed that to me are very sound fundamental advice in terms of when to buy into the market. Amazon, after that massive sell-off, to me is just a great buy. There's several companies that have just had some sell-offs, but this rules for buying on a pullback, this to me these are fundamental, and so that will probably help you out as well. So thank you so much for tuning into Young Money Investments. Like I said, message me, have any questions, I'm here to help. Yeah, let's get it, and let's make this week green, even with the market being crazy. Even if it's not a green week, we got time Time. Time is your best friend. That's why options trading is so crazy, but let's do it. Thanks so much for tuning into Young Money Investments. I'll talk to y'all later. Bye.